Okay, check the date. It is February 18th, 2026.
Here we are.
And right now, you can pull out your phone, film a 4K video of, I don't know, your cat doing a backflip, and you can beam it to your friend in Antarctica.
Instantly. For free.
Instantly.
Yeah.
For free. The data just moves. It's magic.
It's a miracle of engineering that we've all just, decided is normal.
Totally. But here's the catch. You try to send that same friend $50.
Mm-mm.
It takes 3 days. It goes through 4 different banks, and it costs you like the price of a sandwich in fees.
It's the great contradiction of the digital age, isn't it? Information is liquid. Money is viscous. It's sticky.
And that stickiness is exactly what we are unpacking today. We are doing a deep dive into the plumbing of the global financial system.
It's a big one.
It is. We have a huge stack of sources, a really heavy working paper from the Bank for International Settlements, a whole comparative thesis on SWIFT versus Ripple, and some breaking news from last month about Saudi Arabia.
And our mission today is really to figure out why. Why is moving money so painful compared to moving data? And, is the new tech, is blockchain, is Ripple, is it actually fixing the problem?
Or is it just building a faster horse?
Exactly. Or a faster version of the same old problems.
So let's start there with the why. Why, in 2026, does sending money still feel like sending a letter in the 1800s?
It all comes down to a concept from that BIS paper, and it's a bit of a mind bender. We all think of money as value.
Right. Coins, paper, numbers on a screen.
But the BIS says no, money isn't really value. Money is trust.
Okay, hang on. Money is trust. I thought money was just math.
Yeah.
The numbers on a ledger. If the math adds up, why do I need to trust you?
Because who's doing the math? I mean, if I just type into a computer that I have $1 million, do you believe me?
No, of course not. I'd want to see a bank statement.
And why do you trust the bank statement?
Because I trust the bank not to lie.
And you trust the bank because the bank trusts the central bank not to, just print money into oblivion. A payment can only happen between people inside the same trust network.
Okay, that makes sense. Like when I buy a coffee down the street, I don't need to personally trust the barista.
Exactly, because you're both in the same domestic trust network. You both trust the dollar, and your banks both trust the Federal Reserve. The central bank is the ultimate referee.
The referee that everyone agrees to listen to.
Precisely. But here's the problem. There's no global central bank. There's no referee for the whole world.
So when I send money from New York to, say, Bangkok,
Yeah.
we step outside the trust network.
You step into a void, a
Yeah.
trust vacuum, and to bridge that vacuum, we've built this thing called correspondent banking.
Okay.
The thesis in our stack calls it a daisy chain.
That sounds kind of nice, but I'm guessing it's not.
No, it's shockingly analog. Let's say you're at Bank A in the U.S. and you want to send money to Bank B in Thailand.
Right.
Bank A does not know Bank B. It doesn't trust it. It has no idea if Bank B is good for the money.
So they can't just wire it over.
No. So Bank A has to find a friend, Bank C, who happens to know Bank D, who happens to have an account with Bank B.
It's literally a game of telephone, but with millions of dollars.
Yes. And at every single link in that chain, someone has to check for compliance, check for money laundering, and take a fee. That's the SWIFT network.
And SWIFT is just the messaging system, right? It's not moving the money itself.
Exactly. People get this wrong all the time. SWIFT is just sending secure text messages between these banks saying, hey, please move this money. It doesn't actually touch the funds.
That explains the delay. But the thesis mentioned something else that, honestly, it shocked me. The pre-funding model.
This is the real killer. It's the hidden cost. Because these banks don't trust each other, they require something called Nostro and Vostro accounts.
Nostro and Vostro. Sounds like a magic act.
It's more like a hostage situation. It means Bank A has to physically park a huge pile of cash in Bank B's vault.
Wait, what?
Just sitting there dormant just in case they need to make a payment later.
Hold on. You're telling me that for me to send money to Thailand, my bank in New York has to keep a suitcase full of currency sitting in a vault in Bangkok, gathering dust forever.
And not just in Bangkok. In London, in Tokyo, in Johannesburg, all over the world.
That is the single most inefficient thing I have ever heard. That's money that can't be loaned out for mortgages.
Can't be invested, can't be used. It's trapped capital. Imagine if every time you wanted to buy a coffee, you had to pre-deposit $5,000 at Starbucks headquarters a month in advance.
That's insane. I wouldn't buy the coffee.
Exactly. And now scale that up across the entire global banking system. We're talking trillions of dollars of idle liquidity. It's just frozen.
And I'm assuming that cost gets passed on to me.
Directly. The thesis shows that because of these sunk costs, fewer and fewer banks can even afford to play this game. It creates a monopoly.
Which means higher prices for everyone else.
The World Bank data from late 2024 showed that banks are still the most expensive channel for remittances. The average fee was around 13.64%.
Nearly 14%. So if a worker's sending $100 home to their family, the bank eats 14 bucks.
Pretty much, and you still have to wait 3 to 5 days for the money to even get there.
Yeah.
In 2026.
Okay. The problem is crystal clear. The physics of money is being slowed down by the friction of trust. So, enter the challenger. Enter Ripple. How does it actually fix this? Is it just, better code?
It's more of a philosophical shift. Instead of that long chain of bilateral trust bank, a trusting C, trusting D Ripple says, let's use the universal trust bridge, a digital asset.
And this is where XRP comes into the picture.
Right. The tech is called on-demand liquidity, or ODL.
Okay, break that down for me. How does ODL get rid of that Starbucks deposit problem?
So instead of Bank A pre-funding an account with euros in France, it just holds its own dollars. When you want to send money, the software instantly converts your dollars into XRP.
Okay.
It sends that XRP across the ledger, which takes seconds, to Bank B in France. And Bank B instantly converts it from XRP back into euros.
So the XRP only exists for, what, a few seconds? Just across the bridge?
That's it. It just carries the value across the trust void. Bank A and Bank B don't need to trust each other. They just need to trust the ledger for the 3 seconds it takes for the transaction to clear.
And the performance data. Is it actually faster? Cheaper?
The difference is, it's stark. SWIFT takes days. The XRP ledger settles in 3 to 5 seconds.
5 days to 5 seconds.
And the cost savings for banks are estimated between 33 and 42%. Mostly because they get to free up all that trapped capital. They can take those trillions of frozen dollars and actually put them to work.
Okay, that sounds like a no-brainer. Faster, cheaper, frees up capital. Why hasn't SWIFT gone bankrupt? Why isn't every bank on Earth using this right now?
Well, there's the technical debate, and then there's the much bigger legal wall. Let's start with the tech.
I feel like I know where this is going.
If you talk to a Bitcoin purist, they'll tell you Ripple isn't real crypto.
Here we go. The crypto tribalism.
But it actually matters here. Bitcoin uses proof of work. Mining, it's totally decentralized, anyone can do it, but it uses the energy of a small country, and it's slow. Ripple uses something called proof of authority.
Proof of authority. That sounds a lot more controlling.
Think of it this way. Bitcoin is like a chaotic town hall meeting where everyone shouts until they agree on what happened. It's fair, but it takes forever.
Right.
Ripple is more like a corporate board meeting. You have a pre-approved list of trusted validators, universities, banks, tech companies, and they just have to sign off on the minutes.
So it's way more efficient, but you have to trust the people in the room.
Exactly. And the critics say that's centralization, that it's corporate friendly, it's the man's crypto.
So it's less power to the people and more power to the banks, but, faster?
You could say that, but that very centralization is what makes it so attractive to institutions. They like board meetings. They hate chaotic town halls.
Which brings us to the real roadblock. The messy reality of law and regulation.
Correct. The thesis calls this global polarization. This is where that universal trust bridge runs into a big concrete wall called national sovereignty.
The outline mentioned Europe as a specific problem area. What's going on there?
Europe is a total paradox. On one hand, they have MiCAR, which is a clear set of rules for crypto. Businesses love clarity.
Fine.
But on the other hand, you have GDPR, the privacy law.
The right to be forgotten.
Yes. You, as a citizen, have the right to demand a company delete your data.
But wait a minute. A core feature of blockchain is that it's immutable. You can't change the past.
Exactly. You cannot delete history on a blockchain. That's the whole point.
So if a European citizen uses a Ripple service and then demands their transaction data be deleted.
What does Ripple do? Do they break the blockchain or do they break the law? It's a fundamental conflict.
That is a mess.
A huge mess. And then you look at the Americas. The U.S. has been a total mess for years.
Wow.
The SEC is fighting the CFTC over who regulates what. They use regulation by enforcement suing people to make the rules.
Which just scares everyone away.
And APAC is a mixed bag. China banned crypto but is all in on its own digital currency. Singapore, meanwhile, is the gold standard. They created clear rules with their Payment Services Act, and all the businesses flocked there.
So Ripple's trying to build this global highway. But every country has different road signs. Some don't even believe in roads.
And here's the ultimate irony in all this. To replace SWIFT, Ripple has to obey the exact same rules that make SWIFT so slow.
KYC and AML, know your customer and anti-money laundering.
Yep. They still have to check everyone's passport at the digital border. The settlement is fast, but the process friction, the compliance friction, that remains. And as Ripple works more with governments, it becomes part of the very establishment it was trying to disrupt.
That is a perfect segue to the news, because we have two stories from early 2026, just last month, that paint a really conflicting picture of where all this is headed.
We do. On one side, you have huge institutional adoption. On the other, a brutal market reality check.
Okay, let's start with the good news, the adoption. We've got this report from January. Saudi Arabia. What's happening with GEAL?
This is a big deal. GEAL is the innovation arm of Riyadh Bank, one of the biggest banks in the Middle East. They've partnered with Ripple to launch a regulatory sandbox.
Unpack that for us. Sandbox. It sounds like a playground.
It's a controlled experiment, basically. The government regulator lets them test new tech, like blockchain payments and tokenization, with real money but under very close supervision.
Why should we care about a sandbox in Riyadh?
Because of the context. Saudi Vision 2030, Saudi Arabia is aggressively trying to pivot its entire economy away from oil and towards being a global fintech hub.
So this isn't just some bank's science project. This is national strategy.
Precisely. They're testing the plumbing for a post-oil future. It shows Ripple is winning the institutional trust game. They're getting inside the national banks.
So if you're an XRP holder, you're probably thinking jackpot. Saudi money meets blockchain speed. Well, the price has to be going to the moon, right?
You would think so, but this is where the plot twists. We have a forecast revision from Standard Chartered dated this month, February 2026.
And they're a heavyweight in this space. They don't just throw numbers around.
They're very respected, and they absolutely slashed their XRP price outlook.
Slashed it.
Significantly. Their previous forecast had XRP hitting $8 by the end of 2026. Their new forecast is $2.80.
Whoa. From $8 to under $3. How does that even make sense when they're signing deals with Saudi banks?
It's the classic disconnect between utility and speculation. The report says there's a broader crypto market downturn right now. The market is trading on macro fear inflation, interest rates, not on a sandbox deal in Riyadh.
So the actual use of the network is going up, but the price of the token is going down because traders are scared.
That's exactly. And for you as a listener, that's the danger zone. You see the adoption headline and you want to buy, but you ignore the recession headline. Institutional deals take years to play out.
Right. Doesn't mean trillions of dollars start flowing tomorrow.
Not at all.
So let's bring this all together. The physics of money is being rewritten. We have this battle between the old guard, SWIFT, trying to improve its old rails.
And the challenger, Ripple, trying to build completely new rails.
And the new rails are definitely faster.
The tech works. Speed and cost as technical problems are basically solved. But the trust network isn't about computer code anymore. It's about legal compliance.
It's about lawyers.
It's about lawyers and regulators and national borders. The barrier isn't the technology, it's sovereignty.
So here's the thought I want to leave you with. It's a bit provocative. If Ripple wins, if they get all the banks, comply with every rule, and centralize their validators to make governments happy.
The big question is, do they just become SWIFT 2.0?
Right. At what point does the disruptor start to look exactly like the thing it was trying to replace, just with a slightly faster engine?
And if they do, is that really a failure? Or is that just what it takes to win in the world of money? Maybe you can't be a rebel and a banker at the same time.
Something to think about next time you're waiting 3 days for that wire transfer. Thanks for diving in with us.
Always a pleasure.